Mr. Chairman, would you say that it is a truism that the United States dollar is the reserve of choice in the world?
Yes, I would.
And that brings us enormous benefits, does it not?
Yes, it does.
Now, 12 years ago, a Republican House brought us to the brink of defaulting on the debt for the first time in history of this country, jeopardizing our credit and the world economy. I'm getting a sense of déjà vu because, once again, Republicans are recklessly demanding draconian spending cuts to programs that hardworking U.S. families rely on in exchange for allowing the Treasury Department to pay for spending that Congress, including most of them, have already voted to authorize. If you want to talk about spending cuts, it seems to me that the budget is the time to do that, but not to put the full faith and credit of the United States at risk. Chairman Powell, can you talk about the catastrophic damage a debt default would inflict on the economy?
So I guess I will start, if I can, by saying that these are really matters between the executive branch and Congress. We do not seek to play a role in these policy issues. But at the end of the day, there's only one solution to this problem, and that is Congress. Whatever else may happen will happen, but Congress really needs to raise the debt ceiling. That's the only way out, in a timely way that allows us to pay all of our bills when and as due. And if we fail to do so, I think that the consequences are hard to estimate, but they could be extraordinarily adverse, and could do longstanding harm.
Well, I think that's a mild statement of what would happen. I understand. I didn't ask you to engage in the congressional executive branch roles. I asked you about the abstract question of what happens if you have a debt default. Isn't even this constant fight putting into question the possibility that the United States will not honor its full faith and credit have consequences within the economy?
In principle, it could. I think markets tend and observers tend to watch this and tend to think that it will work out, and it has in the past worked out. So it needs to work out this time too.
Now, seeing your testimony before the committee, is it fair to say that you'll do whatever is necessary to tame inflation?
We serve a dual mandate, and we will do what we can, everything we can to restore price stability while also serving maximum employment.
And primarily, that means additional rate increases, would it not? What other tool do you have?
That's what we have. The balance sheet, the shrinkage of the balance sheet will continue too, but it's principally rate hikes.
So the question is, when does that part of doing anything necessary to tame inflation, come into conflict with your other mandate of maximum employment?
Not now, when we have the lowest unemployment in 54 years, and where we have a labor market that is extremely tight, extremely. So, but that time could come, but it really isn't now, where we're very far from our price stability mandate, and in effect, the economy is past most estimates of maximum employment.
Thank you, Mr. Chairman.
Thanks, Senator Menendez. Senator Kennedy of Louisiana.